All right, so today I wanted to talk about this post from Ray Dalio. He's someone I admire quite a bit, and I think he makes a good point here. First things first, if you get value out of the video, please like and subscribe. Check out the links below as always. So let's get into what he says, and then I'll give my thoughts. My view is that buying and holding real estate is not an effective investment strategy in our current economic environment for a few reasons. First being, real estate is more interest rate sensitive than it is inflation sensitive. So given our current circumstances, it is likely to go down in real terms. Number two, it's a fixed asset that's easy to tax, which limits its impacts on your ability to diversify. And three, real estate is nailed down, so investing in it makes it more difficult to move money from one place to another. That's my view in a nutshell. I'm curious to hear if you agree. Now, one thing that Ray Dalio also brought up, that he believes that, I believe it's 15%. Again, that's his number. I believe it should be higher, but you should be allocated to Bitcoin. And the first thing I wanted to bring up is do I think he's right here? And I think he absolutely is right. But the most important thing I wanted to bring up here is the Bitcoin versus real estate debate. Now, honestly, I think this is a really easy debate. I think Bitcoin is clearly better. Obviously, real estate does have its strengths, but the weaknesses, I think, are too hard to ignore. And the first and most important thing he brings up here, which very little people bring up because very few people, even real estate, like most real estate investors probably don't even understand this. Like, of the people that I know that own real estate, like a rental property or two or three, which isn't very many to be clear, but I don't think any of them understand this. And at least to the degree that I do, and I don't even consider myself an expert. So it's kind of scary when you think about it. But what he's saying here is real estate is more interest rate sensitive than it is inflation sensitive. So what does he mean by that? Well, the way I think about it is when you look at interest rates, at least in America, but I mean the West as a whole, basically the exact same, not exactly the same, but pretty much the exact same. From 1980 roughly until 2022, interest rates went down consistently. Now there was some ebbs and flows in there, but it was a consistent trend down. And that is good for real estate, right? Whenever interest rates go down, the value of REITs always goes up, right? Real estate investment trusts. So if interest rates go down, that's good for people with rental properties because they can refinance at lower rates. They can add more properties, et cetera, et cetera. But when rates go up, it's now more expensive to borrow. And this is what we've seen over the last couple years, is that the trend in, interest rates just consistently going down over time, it's broken the pattern. Now, again, interest rates have gone down over the last year or so. The Fed is looking like they're going to cut at the next meeting and probably again within the next 6 months or so. But unless we see a pretty severe recession, it's unlikely that we go back to 1%, sub 1% interest rates, and therefore your 2.5-3% mortgages. It's unlikely that happens, and that's the point that he's bringing up here, is that one of the main reasons that real estate was such a good investment for the boomers is interest rates consistently went down, right? And not to mention too, when rates were 15%, like back in the 80s, it was harder to. I mean, if interest rates were 15% now, how hard would it be to get approved for a mortgage? Like a lot of people could still do it, but not nearly as many as currently are. Right? So that's the point. And this is something that not a lot of people are considering, right? Not a lot of people are considering, right? I was talking to someone the other day. I won't say who it is. They were like, oh, well, I'm getting whatever, 3.5%, in GICs. And they're like, oh, well, I'm not going to lose money. Like, I don't want to lose money. And I totally understand that, right? I mean, obviously. The problem is, and again, the alternative to what they were doing was like, I said, hey, you could just put money in the S&P, You could use options. You could lower your risk. You could still get your 8-10% return per year. You're going to have a down year every now and then, but in the end, you'll be up way more. And again, in their minds, it was, I can't afford to lose money. And my point here is whether or not you're making money nominally doesn't matter, right? And if you don't know what nominally means just straight up, are you up or are you down? But when it comes to in real terms, right? In real terms, like he says here, that is when you're including for inflation, when you're accounting for inflation. And people just don't get this. Like a lot of people just do not get this. They think they put money in a GIC or in a CD or in bonds and they're getting 3, 4, 5%. But at the end of the day, that's really irrelevant, because if inflation's running at 4% or 5% and you're getting 3%, you are losing money. And not only that, you are quite literally guaranteeing yourself that you lose money. Like the worst way to invest is a way to where you guarantee yourself to lose money. Now, I'm not saying I know for sure that inflation is going to be whatever, 4 or 5%. But if I had to put money on losing money through investing in stocks or better yet, Bitcoin, or losing money in bonds or in GICs or CDs, it's not even close for me. Like it's not even close. In my opinion, obviously I could be wrong here, but my opinion, but I would say you're like 5 times more likely to lose money by buying bonds, GICs, CDs, those kind of things. Because we have debts that are, the government deficits are worse than ever. And with higher interest rates, it's even harder to finance them. And we have an economy. It's not like we have some booming economy to where, growth can make up for the increased inflation. Like that's not the case. And what is the alternative? The alternative is governments are going to have to run larger and larger deficits, which means higher and higher inflation. And the best way to escape that is going to be Bitcoin. It's going to be stocks, and to some degree, it's going to be real estate. But getting back into the real estate versus Bitcoin debate, the real estate versus Bitcoin debate is incredibly easy. Like it's incredibly easy because number one, Bitcoin has performed way better than real estate has since Bitcoin's been around. Way better. And it's going to continue to do that. Right? So, and on top of that, owning rental properties is a hassle. Now again, so like whenever you point out the whole, I don't want to, get a call at midnight to have to go fix a toilet. Like most people say, yeah, I've never had to deal with that. But number one, there's no guarantee you're not going to have to do that. Like a lot of people say, I've never dealt with a really bad tenant, but how do you know you're not going to? And even if you don't, you still have somewhat of a hassle. What happens if they leave? You still have to find a new tenant. You still have to vet the new tenant. You're still going to have to do upgrades every night. If it's a long-term thing, you're still going to have to do upgrades. If it's I'm going to buy it, I'm going to fix it up and I'm going to sell it in a year or 5 years or whatever. There's still a hassle. There's a lot of paperwork involved with, I bought a house recently. There's quite a bit of paperwork involved in that kind of stuff. You got to talk to lawyers. You got to talk to realtors. If you can do it yourself, it's even more work. And if you don't do it yourself, it's going to cost you money. So why would you do all that work when you're going to get a worse return than you are if you buy Bitcoin? It makes no sense. Like it makes no sense. And people say, well, if it's so obvious, then why aren't more people doing it? Well, more people aren't doing it for obvious reasons. A lot of people they don't know what they're missing, right? They don't know what they're missing. Like if you go tell someone, it's kind of like describing, whatever the latest technology is. Like, when smartphones came out, you got your first smartphone, and you show it to like your grandparents, that's kind of like what it is. That's what it is with talking to they just don't get it. Like it's like going to like the poorest place in the world and showing them a smartphone. Like they're not going to get it. And I don't mean to be rude. Don't get me wrong there. I'm just making a point. That's the problem. But this can only continue for so long, because the longer Bitcoin continues to outperform, well, by its very definition, the more people are going to find out about it. So another thing that I think is holding Bitcoin back a little bit also is, which is going to change, and it already has changed a little bit, but I still think there's a lot of room to grow, is Bitcoin lending. And part of the reason why real estate is such a big industry, because rich people, or at the very least, moderately rich people, upper middle class people, they can borrow against their real estate, right? So if you have a $500,000 property that you own outright, you could relatively easily get a $250,000 loan. Not only that, probably at a very good interest rate, right? So this is the thing about Bitcoin, is there are some options for lending right now. The first problem is the interest rates are like 10%, 12% from what I've seen. And it's still not very, very mainstream, very widespread, even within the Bitcoin industry. But that's going to change at some point. Like, there's no way that doesn't change. And it's only going to get more convenient, and the rates are going to come down over time, assuming interest rates don't skyrocket in, the Fed funds and whatnot. So that's something that I think is holding it back, but that's going to change at some point, right? That is going to change at some point. So Ray Dalio, I think, is spot on here. And another thing here too, when it comes to real estate, is when you look at least in Western countries, like, specifically Canada and the US is the areas that I follow the most. Obviously live in Canada. The US news, you see a ton. Even in Canada, you arguably see American news more than you see Canadian news. A big problem is, affordability, is cost of living. And something that I don't think enough real estate investors are considering is, if it continues, like if it continuously becomes harder and harder for the average person to own a house or even pay rent, eventually it's going to get to the point where people are going to vote for some really, really stupid stuff. Like, we're talking like, not only like, small taxes, like we're talking like taxes on your primary residence, unrealized capital gains taxes, like stuff that is just absolutely insane like that. Like, that is going to happen if this stuff continues. And if you have Bitcoin, well, number one, you can go wherever you want and not have to worry about that stuff. And number two, well, the government can't take it from you. If the government imposes a unrealized capital gains tax on your rental property, there's nothing you can do. They're taking the money one way or the other, right? And another thing too is that at least in the big cities that are around me, like, the city councils have done a horrible job at managing their budgets, like horrible job. And they're increasing property taxes like 8% a year, some insane stuff like that, right? So eventually it's going to get, they're just going to keep jacking that up, because we have, and this is another really, really big problem too, is it kind of what I'm talking about, but we got a lot of really, really incompetent people in government, right up from city councilors, right up to, prime ministers and presidents. Like, a lot of really incompetent people. Some of them I think are genuinely evil, but at the very least, a lot of really incompetent people. And what do really incompetent people do? They impose idiotic stuff that punishes successful people and rewards unsuccessful people. And one of the big boogeymen going forward, if people don't get their act together, is going to be landlords and real estate developers. And I'm not defending everything they do, because I think they do some stuff that is questionable, but at the very least, I can't get on board with the people who criticize them, because their solution is far worse than anything that's going on right now. So in a nutshell here, to sum it up, Bitcoin is better than real estate, because the government can't take your Bitcoin. I mean, they can make your life miserable, but at the very least, they can't take it. They can take your real estate. They can increase taxes on your real estate, right? But they can't do any of that stuff with Bitcoin. And on top of that, you don't have to deal with any hard tenets right? I mean, there's a lot of these areas that, I mean, getting people evicted is like a 1-year process, 6-month process. Like, people can literally live in your property for a year straight. You make no money. You still got to pay your mortgage. And in the end, you're lucky to even get your damage deposit back. Like, I don't understand why people want to go through that when there's a better alternative just sitting there for them that requires virtually no effort. Now, I get there's the hassle of having to move things over and whatnot, but once it's done, it's done. Like, you don't have to do anything. You can sit on it for a year, 5 years, 10 years, 20 years, and do absolutely nothing. Absolutely nothing. And you're going to get better return than your rental property anyway. Like, it makes no sense that a lot of people have not caught on to this, but frankly, it's really only a matter of time. Like, it's really only a matter of time. So anyway, I've got on long enough for that. If you like the video, please like and subscribe. Check out the links below, like I said, and stay tuned for more.